Hey traders, happy Sunday. This is Ron Haight. Hope you guys are having a great weekend. As always, everything in this presentation is for educational purposes only. We'll start off here. This is Thinkorswim. We're going to take a look at the S&P ETF, the spiders. This is a daily chart. You can see the COVID crash, the subsequent rally breaking out to new highs over here on the spiders. If we zoom in though, back on the 18th of September, we broke the 50-day. We got back up and couldn't get above it. And then on Monday this past week, we closed above it and took out the little swing high right here. Now we've even taken out these previous highs around 342. The market just couldn't get above it. Well, Thursday and Friday confidently above it. The target now is the all-time highs on the S&P. If I go to a weekly chart, we'll do a 3-year weekly. We tested the 20 period on the weekly, which is the red line, and we're pushing back up. The dailies and weeklies are now bullish as we head into the election, which brings up the number one question seemingly on everybody's mind. What happens if Biden wins, or what happens if Trump wins, etc. And depending, what your political view might be, you're going to be happy for one or not happy with the other. What we want to do, I think, from a trading perspective is just watch the volume. The volume comes in and we start breaking moving averages. This is what allows, or lets, if you will, gives the bears the technical edge. Once we get back up here, this is where the bulls start taking control. So as each week, pretty much I'm going to stick to Sundays right now. Each weekend video that I give you, we're going to be focusing on this orange line. We're going to be focusing on swing highs and swing lows. And when they get violated, it shows you, are the bulls or the bears winning based on money, based on volume? Who's putting their money down for what? Right now, bulls are back in control. Again, target are the all-time highs. Now let's take a look at the Qs. Qs, they blew away their previous high all the way back over the summer in June, which is unusual. And then they've just put their most recent all-time high back on the second trading day of September. We came down, we broke the 50-day, volume began to increase. The subsequent up days were lower volume, but then we regained the 50 here back on the 28th of September. Seems so long ago, right? Just 2 weeks ago. We then broke it on the 2nd and got right back above it, broke it again, got right back above it. What this tells me is there's been no follow through to the downside, as you can see. But again, what it tells me is we need 2 days. We are going to need to see now a second day below this orange line, that 50-day moving average, that institutional moving average, to really show that the bears they're not just doing this one-day flip-flop thing where they're trying to gain control and they couldn't. As of now, though, the bulls have control. All-time highs are the target. Also note that the Qs took out these previous highs here, 281 or so. They took out this one. Friday was an interesting day. You can look at the volume and say it was pretty paltry, but price rules. We closed the highs of the day. There is the target. Now, if we take a look at the IWM, the Russell, it just blew through its previous highs. It's now on target to take out the all-time high, or at least not take it out, but the target would be the all-time high. If we go to the diamond, the DIA, we zoom in here. They're not back at the previous highs yet. They did break the 50-day with a gap back on the 21st, then bearish engulfing. That is not a good sign. We then go into a couple-day trading range. We try to get up to the 50 in orange. We can't. We get back below. We're above. And then we've stayed above since the 30th of September, which is what, 3, 6, 8 trading days ago. So about a week and a half. We even had bearish engulfing on Tuesday. But remember about bearish engulfing candles. We want to see the second down day. If we had gotten a down day Wednesday and break back below the 50-day, that would have been a really bad sign. And what happens instead? We're just powering higher. So if I zoom back up, the immediate test resistance level going to be around 291, 292. We get above there, then it's the all-time highs. So looking at all four, the bulls now have the edge heading into this week, less than a month before the election. If we head over here to the VIX, zooming in, it's back below the 50. This is also bullish for equities. Take a look at SMH, the semis. They just blew through the previous all-time high on Friday. Thursday, they were there. Friday just said, see you later, alligator, and off it goes. This is bullish. The transports just blew through the previous highs. This is bullish as well. If we look at gold, we'll do gold, silver, and bonds. Here's GLD. Zooming in, lower high, lower high, lower high. We're still printing lower highs. You could make an argument and say, well, Friday got above this little swing high. We really need to take out something bigger, which was up here. So for GLD, yes, it was up on Friday around 181. I'd want to see it get up to about 185.5, 186, and then it would start to shift more bullish. As of right now, the best case for gold on the daily chart is still bearish. I'm sorry, it's still neutral, best case, but I would say neutral to bearish here on the dailies. Plus, we could draw a trend line in here, which this has not broken. In fact, let's do that. There, I just popped it in. You can see, and I can still do this as well, we're still in a downtrending channel. This would be considered one massive bull flag, if you will. I'd get away from the bull flag scenario, although it does look like it. I would say, hey, we're just in a downtrending channel. I'd want to take out the 50-day in orange, which is right there. And then, like I said, get back above that high right there. All right, let's take a look at the gold miners, GDX. It's also below the 50. You'd want it to take out a previous swing high right there around 43.5. But because 45 is so close, really this is sort of a, at best case, a trading range. But again, here's a high, here's a high, here's a low, here's a low, lower lows, lower highs. It's not an aggressive bearish trend by any means, but there is a slight downward trend here, even though it's. Remember, 2 months. Gold enters its rock star window of time. You want to be ready for it. But this is still the window when gold and silver and the miners can go through corrections. If we take a look at SLV, did have a nice update on Friday, but we're not above the 50. If we get above the 50, you go back up to these highs here. I just don't think gold and silver right now, or even the miners, is a good reward to risk ratio looking out for a couple days or even a week or two. They're just choppy with overall bearish tones to them, but there's nothing bullish about the silver chart on the daily right now. All right, bonds, TLT, huge trading range. Look at that horizontal line. 172 would be the highs. I would go down here to the lows around 155. Otherwise, big trading range. We did drop down last week out of this trading range, but we need to take out that swing low. If that swing low falls, then you start coming back down to the low to mid 140s. So goes the market, so goes Apple, or I should say so goes Apple, so goes the market. Apple did regain the 50-day moving average. 2 out of the 5 days. It was up on Monday, down Tuesday, Wednesday, Thursday, wishy-washy. Friday, we're back up. For Apple, I'm going to be really picky here. I'm going to go back to this bearish engulfing, and the high there was 120.50. That's what I'd want to see broken. A close above there, all-time highs are the target. How about Tesla? Still a bull flag. In fact, if I come in here, I can I'll show you what I mean by this pennant formation. These can often lead to explosive gains. What you're looking to do here, if we zoom in closer, is connect as many dots as possible. 3 basically creates the trend line. We can get 3 points there. Here we're sort of getting 2, but it gives you the visual picture. I wouldn't necessarily look for a break of this trend line to say, oh, that is a technical breakout and I'd want to go long. I'd really want to take out those previous highs. It's not that far up. On the downside, Tesla has not closed below its 50-day by any serious margin in months. So a break below the 50-day would be bearish. Then you come down here in the lower right and you see 1021 according to Thinkorswim as the earnings. That's 10 days away. If I was carrying Tesla into that report, if it was money I couldn't afford to lose, that's where I would consider protected put options, because you just never know what might come out in that report and get said. Amazon broke the 50-day. We came back up, just kept hitting our head. Monday, we got above it a little bit. Tuesday, back down. Friday, we got back up. We broke through here. Realistically, that would be the target technically, previous highs. You could argue and say, well, let's get above, just like we did with Apple. Get me above one of those bearish engulfing patterns, which is around 3307. Not very far off, and that would be more bullish. But right now, technically, it is bullish. It's above the 50-day in orange and the 20-day EMA in red. How about Netflix? Still caught in this trading range. Remember, Netflix is one of our best stocks as we get into the end of the year, but not right now. Just be careful. They have earnings coming up on 10/20. That's also next week. We are entering the heart of earnings season. There's going to be a lot of companies reporting, so I'm going to just throw it out there and say again, practice using protective puts at the money, typically 45, 60 days in time. because if these companies miss on their reports, the losses could be devastating. So just practice on paper. But until Netflix breaks this box that I've drawn in, it's just range bound. Right now we're at the upper end of that box. But again, with earnings coming, anything can happen. How about Microsoft? They're going to have earnings a little later. They popped above, took out previous highs. Their target right now would be the all-time highs at this stage, but they're going to have earnings shortly too. Be careful. And then I had questions on going out to eat and electronic stock. Best Buy. So let's start with Garden. They're Olive Garden, Longhorn Steakhouse, Bahama Breeze, Capitol Grill, to name a few. And the question is, there's so much information coming out from various sources. One day you're told do this, and then they say later, whatever, it doesn't work, and it can confuse. I would say maybe your investing judgment on particular stocks. Here again is what I would do, just like the politics. We can all have our opinions about COVID and about the president and Biden or whatever it might be. Let's just see what the money is doing. So yes, it's going to get colder. Yes, the restaurants aren't going to be able to keep people eating outdoors. Usually once the temperature drops below 60, people don't want to eat outdoors. That's not what they want. But indoor capacity is still at 25% or 50%, and the restaurants can't survive. They're not built for that. The rent is too high. They didn't build a bigger store just so they can have empty tables. So once the weather keeps getting colder here, especially in the northern part of the country, what will happen to these stocks? Well, guess what? I have no idea either. We have to see if the lockdown is going to be removed, go back to somewhat of a more normal life, or not. And if the answer is not and it's negative, we're going to see these stocks break down through the 20-day and break down through the 50-day, and volume's going to increase. Maybe will we retest the lows? I don't know. That was panic sell-off. Maybe we come back into the trading range in the 70s. That would still be 30% lower. Just watch for that rise in volume closing near the end to the lowest part of the day. If we see that, that is the tell, and we crack those moving averages, that's another tap on the shoulder. If we take a look at EAT, which is Brinker, this is Chili's, Maggiano's. They've had a big push here since August, consolidating, and now they're starting to break out. Well, they could easily come back down to this level, which is over a 50% drop, if they can't return to somewhat normal dining. What would I watch for? Watch the 50-day. We haven't broken below it since that major rally began. So if we get below the 50-day, rise in volume, close at the end of the day, those are the telltale signs something is wrong. Then the question was Best Buy. Hey, everybody's seemingly putting pools in their backyard. They're putting TVs back there. They're buying all their stuff for their home. When do stocks like whether it's Best Buy, Bed Bath & Beyond, Home Depot, Lowe's, etc., pool, when do these things start rolling over? Well, guess what? Same thing I always tell you guys in these videos. Watch that 50-day. A stock like BBY has not been below the 50-day since it got above it back in April. We crack that sucker more than just by a penny or two. We get below it by 50 cents a buck. That's the telltale sign. The volume increases. We close the lows of the day. You're being put on notice. So if you have some of these high flyers coming into earnings, which BBY is not, Best Buy, I can just show you what it might look like. We can do BBY. Let's just use this one as a hypothetical example. I'd consider going out 45 to 90 days. Let's say I wanted to pick maybe December or maybe January, and then I would consider something, the stock's at 116. I would come in here right near the money, something like this. So 115 is close enough. One long put per 100 shares. Practice this on paper for some of these companies that are due to report, because by the time the earnings comes out, the stock could be all the way down here, and then you miss your chance at being bearish. You miss your chance to hedge. So you either want to be prepared for earnings, or in this case, BBY, who doesn't have earnings, a break of the 50, that would invoke the consideration for a protective put. Okay, so I hope this is helpful and you enjoy the videos. I wish you guys all the very best as we go through earnings season and into what seems to be a crazy election. So wish you and your families all the best. Take good care, and I'll be back with you next Sunday. See you later.